Here is a summary of the Boston Scientific Q3 2025 earnings call transcript, designed for reading aloud. Introduction. Good morning, everyone, and welcome to the Boston Scientific third quarter 2025 earnings call. Today, we'll hear from Mike Mahoney, Chairman and Chief Executive Officer, and John Monson, Executive Vice President and Chief Financial Officer. Key financial highlights. Q3 2025, Boston Scientific delivered a strong third quarter, exceeding expectations. Total company operational sales grew by an impressive 19%. Organic sales grew by 15%, surpassing the high end of guidance, 12 to 14%. This growth was robust across both cardiovascular and MedSurg segments. Adjusted earnings per share (EPS) reached 75 cents, a 19% increase, also exceeding guidance, 70 to 72 cents. Adjusted operating margin stood at a healthy 28%. Consolidated revenue reached $5.065 billion, a reported growth of 20.3% year over year. Adjusted gross margin achieved 71%, a 60 basis point improvement year over year, driven by a favorable product mix. Free cash flow recorded at $1.163 billion for the quarter. Future guidance and outlook. The company has raised its full-year outlook, reflecting confidence in sustained growth. Fourth quarter 2025 organic growth projected to be between 11% and 13%. Full year 2025 organic growth increased to approximately 15.5%. Full year 2025 adjusted EPS raised to $3.02 to $3.04, representing 20% to 21% growth. Fourth quarter 2025 adjusted EPS expected to be between 77 cents and 79 cents. Long-range plan 2026 to 2028. Boston Scientific targets 10% plus average organic revenue growth, approximately 50 basis points of annual adjusted operating margin expansion, leveraged double-digit adjusted EPS growth, and 70 to 80% annual free cash flow conversion. Regional performance. United States demonstrated exceptional performance with 27% operational growth, broad-based across cardiovascular, endoscopy, and neuromodulation. Europe, Middle East, and Africa, EMEA declined 2% operationally due to two temporary headwinds. The discontinuation of the Accurate valve, approximate $50 million impact, and an ERP system upgrade at their Calcutta distribution center, which caused a backorder of approximately $30 million. This backorder is expected to improve in Q4. Excluding these factors, EMEA growth would have been in the high single digits, driven by strong performance in electrophysiology, EP, and complex PCI. Asia Pacific grew 17% operationally, led by strong double-digit growth in Japan, Watchman, EP, Therapulse, and China. China achieved impressive mid-teen growth despite VBP pressures in its peripheral business, driven by ICTX and EP. The NMPA approval for Watchman FLX Pro in China is a significant positive. Business unit performance and highlights. Electrophysiology, EP a standout performer, with sales growing 63%. Therapulse remains the leading PFA technology, having treated over 500,000 patients globally. Watchman delivered outstanding 35% growth, exceeding 600,000 patients treated to date. Concomitant uptake in the U.S. is accelerating, and continued growth is expected through new clinical data and a next-generation device. Cardiology sales grew 23%. Interventional cardiology therapy sales grew 3%, including the Accurate Impact, with double-digit growth in coronary therapies driven by agent drug-coated balloon in the U.S. peripheral interventions. PI sales grew 16% operationally and 6% organically, with strong U.S. growth offset by China VBP. interventional oncology and embolization, achieved double-digit growth, powered by cryoablation and embolization therapies. Endoscopy grew 9% with double-digit growth in key products like Axios and Overstitch. Neuromodulation sales increased 9%, supported by strong performance in DBS and pain management, with the Intercept franchise showing high single-digit growth. Urology sales grew 27% operationally and 5% organically, driven by international stone management. Axonics performance is improving post-disruption, with the F15 approval in Europe being a positive. Acquisitions: Nalu Medical agreement to acquire Nalu Medical, expanding the portfolio into peripheral nerve pain and complementing their interventional pain position. Expected to close in the first half of 2026. Elutia Bioenvelope Assets closed acquisition of Elutia Bioenvelope Assets, designed to prevent postoperative complications for pacemakers and defibrillators. Significant risk factors, while not explicitly detailed in this excerpt beyond the specific EMEA headwinds, the transcript mentions that factors that may cause actual results to differ materially from forward-looking statements are discussed in SEC filings, including the risk factors section of their Form 10-K. Key risks alluded to or present include regulatory approvals and reimbursement. The success of product launches and market penetration is dependent on regulatory approvals and favorable reimbursement policies. Competition. The medical technology landscape is competitive, with new products and technologies emerging from competitors. China VBP. Volume-based procurement in China continues to be a factor impacting growth in certain segments. ERP system implementation. As seen in EMEA, such implementations can cause temporary disruptions and backorders. Clinical trial outcomes. Future growth, particularly for Watchman and Agent, relies on positive outcomes from ongoing clinical trials. Lowlights: EMEA performance. The 2% operational decline in EMEA was a negative, though attributed to specific transit issues. Axonics performance. While improving, Axonics is still performing below expectations due to post-disruption commercial execution. High voltage CRM business. This segment experienced a low single-digit decline. Most important statements from management: Mike Mahoney, CO. Our quarterly results again exceeded our expectations, led by our innovative portfolio, strong execution, and a winning spirit of our global team. Watchman clearly is a gem for Boston Scientific. We essentially created the market through great clinical evidence. He expressed confidence in continued 20% market CAGR growth for Watchman. Regarding China, China shows the winning spirit of our global team. We are able to continue to offset VBP price pressures with new innovation and new launches. On the rest of the portfolio outside EP and Watchman, not every business grows faster than the market every quarter, but as a whole, we clearly do. The rest of the business is thriving. On future growth, we have an incredibly strong global team that is relentlessly pursuing and investing in meaningful innovation to deliver differentiated growth and leverage EPS growth this year and for years to come. John Monson, CFO. Q3 adjusted EPS of 75 cents grew 19%, exceeding the high end of the guidance range of 70 cents to 72 cents. As a result of our Q3 performance, we now anticipate full-year adjusted gross margin to slightly improve versus 2024, inclusive of an approximate $100 million tariff headwind for the full year. We expect full-year adjusted earnings per share to be in the range of $3.02 to $3.04, representing growth of 20% to 21% versus 2024. On long-range goals, from 2026 to 2028, we're targeting 10% plus average organic revenue growth, approximately 50 basis points of annual adjusted operating margin expansion, leverage double-digit adjusted earnings per share growth, and 70% to 80% annual free cash flow conversion. We feel that these goals represent differentiated performance in medtech, and we look forward to executing on them. This concludes the summary of Boston Scientific's Q3 2025 earnings call.